One of the things that small retail investors like myself look forward to is finding ways to build passive income. The concept is to get paid no matter what you're doing, when you're sleeping, or even if you're on vacation. Passive income is all about finding ways to bring in cash without having to work for it. And that's a feeling of security that we could all use. Dividends are just one way of getting paid for putting our money to work. Let's look at the companies that have paid me this quarter, and let's get to it. What's up YouTube, James from Thursday Media here, and in this video we're looking at companies that have paid me over the last 3 months and a little information about them. But first let me say that these are not recommendations. These are just stocks that I happen to pick up at a good time and that pay me dividends. I started this dividend portfolio in 2020 and brought in a total of $161.84 during that entire year. Now this doesn't sound like much, but this would be enough to buy new shares of several different companies or reinvest right back into these dividend-paying stocks. I tracked this on Google Sheets to give me a visual of the progress that I'm making. And one thing that we need to make sure that we track is hitting the like button so that YouTube knows that we're still in the game. If you're new to dividend investing, dividends are payments that companies give to the shareholders just for holding the stock. While this is a great way of earning from investing your money, be aware that this does slow the growth of the company as dividends are paid out in cash, and this is cash that could have been reinvested back into the company to grow that business. Some of the biggest names, though, in the Fortune 500 do pay dividends and are still considered great investments. Most companies pay their dividend 4 times a year or every 3 months, but the month that this begins on does vary. So I try to maintain positions in several different companies to make sure that I'm getting paid every month. If we use Pepsi as an example, they pay $1.02 for each share that you hold, and they will pay you this money in January, March, June, and September. Verizon, on the other hand, pays in February, May, August, and November. During 2021, I'd like to get my payments a little more balanced. With different companies paying on different months, getting paid roughly the same amount each month is something I'd like to achieve. So in January, I received payments from 4 businesses. I held 25 shares of tax preparation company H&R Block, ticker HRB, that paid 26 cents per share for a total of $6.50. This was followed by my real estate investment trust stocks, and these are companies that manage real estate and pay out to their shareholders a portion of what they collect. New York Mortgage Trust, NYMT, paid 10 cents per share for my 60 shares, totaling $6. Two Harbors Investment, ticker TWO, paid 17 cents per share for my 56 shares, totaling $9.52. And finally, I held 100 shares of MFA Financial, ticker MFA, paying 7.5 cents per share for a total of $7.50. Finishing up January with a total payout of $29.52. In February, I was also paid 4 times. The month started with communications giant AT&T, ticker symbol T, paying 52 cents per share. I held 22 shares, totaling up to a dividend of $11.44. I was paid 20.5 cents for each of my 2 shares of iPhone maker Apple, adding an additional 41 cents. And finally, I was paid in February by 2 master limited partnership companies. These companies typically pay high dividends, but they also act as pass-through tax entities, so they typically come with some unique tax burdens if you own units in these businesses. There are websites that track tickers that meet this criteria, so just be aware that the dividend you receive needs to be higher than the extra expenses that you're going to pay a tax preparer to file the K-1 forms that come with them. USD Partners, ticker symbol USDP, paid 11.1 cents per unit for 141 units, totaling $15.65. And finally, Enterprise Products, EPD, paid 45 cents per share for my 61 shares, paying out $27.45. This brings my February total to $51.95. March is where things really slowed down. I was paid by 3 companies, but not nearly as much as I had made in the previous 2 months. Computer chip company Intel, ticker INTC, paid 34.75 cents per share for my 9 shares and a payment of $3.13. I held 11 shares of energy provider Dominion Energy, ticker symbol D, paying 63 cents per share for a dividend of $6.93. And finally, Bank of America, ticker BAC, paid 18 cents for each of my 19 shares, and a total of $3.42. This brings my March payout to $13.48, making my grand total for the first quarter of 2021 $97.95. This is nearly $100 that I've earned from simply investing and holding on to these stocks. Now remember, I usually can't invest more than $400 a month, so I don't have the expectation that a couple of years of investing are going to produce life-changing income. For me, this isn't a sprint or finding an instant answer for passive income. This type of value investing takes time, so don't feel discouraged if you can't take a huge chunk of money, invest it, and achieve instant retirement. My goal is to keep investing and take the dividends that I make and reinvest it right back into these companies. What's exciting is that I'm on pace to make nearly $400 in dividends this year, which is the equivalent for me of getting an entire extra month worth of investing money. If I maintain this pace for 10 years with no growth, I could still be seeing over $100 a month in payouts. I'm excited to keep watching this portfolio grow and really build into making passive income that I can continue to invest. Now, it is worth mentioning that you do have to pay taxes on dividends, so for people that are making a lot of money, it might make a little bit less sense to invest in dividend companies because you're going to get taxed on a lot of that growth. For anyone in a higher tax bracket, it may make more sense to stay invested in growth companies. Dividends are technically a part of a company's growth paid out to its shareholders, so if you can avoid paying taxes on growth, then you should. But as always, I am not a financial advisor. I'm just a regular guy with a regular job that likes scraping a few pennies here and there off of dividends. So make sure that you do your own research before you make any financial decision and that you follow a financial strategy that you're comfortable with. If you're interested in investing and collecting your own dividends, I'll leave some links down below that'll help get you started. Some of these are even offering free stocks when you sign up and make your first deposit. If you like this video and you want more like it, make sure that you subscribe to the channel. I post every Thursday and Sunday unless I throw in a bonus. Keep finding ways to earn, and as always, thanks so much for being here, and I'll see you in the next one.